in the chat if you guys can hear me okay. Hope everybody is doing splendid. It's Wednesday. Hump day, right? I'm grateful for every single one of you guys that hopped on today's call, right? I promise you that today, right, today in particular, we're going to be going through some sauce, but I really just want to make sure that you guys are locked in, right? I want to make sure that you guys are locked in, you guys are focused, because the last couple of days have really been, like, they've just been saucy. Like, I don't know what other way to put it, because I don't think there's a lot of people that have the experience as well as the understanding to be able to teach the concepts that we've gone through. And I've gotten a lot of feedback from a lot of you guys that have been on the calls just saying that the simplified version of just the way that I'm explaining things makes things a lot easier for you guys to thrive, right? So in terms of that, what you really have to understand, like I said, is just it's important to be able to just take pieces of information and apply them. Like I said, this free bootcamp is crucial because there's a lot of free tools, free aspects that, you know, I'm giving out, but then at the same time, for you guys to actually plug into real mentorship, you guys will be able to get more hands-on. So as you guys can see from the title, today, we're going to be going through some smart money concepts. Okay. So going through some smart money concepts, basically what we're going to go ahead and do is we're going to start with the basics. Okay. We're going to start with the basics. So when a lot of people hear smart money or they think smart money, there's a lot of different things that probably come to mind when it comes to what you think. Okay, so when I say institutional or smart money concepts, like what do you think of, right? Drop in the chat. I'm curious to see what you guys think of, right? Because for me, when I hear that statement, what I automatically think about is observe the masses and do the opposite. Okay? So overall, there's going to be a few things that we look for, right, when it comes down to the market. So the key things, right, imbalance, right, number 2, mitigation, right, number 3, I always forget how to spell this shit. I always mix up the Y and the K. Wait. Should just type whack off. To me, realistically, if you're just playing imbalance, mitigation, right? And mitigation, I'll elaborate on mitigation because it's really a 2-in-1. It's like mitigation / institutional areas. But to me, it's really, there would be nothing to mitigate out of, right? If we didn't have those institutional areas. So that's why, in terms of simplified version, right, this is really what we're going to sit here and we're going to look at. Okay, so imbalance, mitigation, and then wick off phase C and phase D. So when it comes down to just ideally being able to have these concepts, like I said, this is just part 1, very basics. This is not even really surface level. It's not even going through everything, right? Like I said, this is just going to be applying things that typically will be able to get you tangible results pretty quickly. Like you'll be able to apply these things after this call and have a better understanding. Okay? So what we have to sit here and look at when it comes down to these 3 things, right? The biggest thing that I feel like people struggle with is mitigation, right? Forgot market structure as well. I feel like structure and mitigation are probably the 2 things that people struggle with the most. Okay? So I genuinely think the first thing that all of you need to learn is market structure. So Luis, if you're on this call, boom. If you're not, then you're going to watch the recording because this is going to be for you, right? When it comes down to the market structure. So market structure really, a lot of people very often get confused with just what's occurring, right? So what we're going to focus on right now is going to be market structure. So we have these 4 things. We'll really just sweep it up. Market structure, the only thing you can see. All right, lovely. So now let's go ahead and create some market structure. So let's say we have price, right, slowly working its way up, right? Healthy price action. Right? Doing that thing. Okay. So, if we just sit here and we take a look at this. Taking a look at the overall market structure, what you want to typically see to confirm just what direction the market is going in is higher highs and higher lows. So if we're buying the market, we want to see a higher high and a higher low be produced. So what is a higher high and a higher low? Well, what a higher high and a higher low is going to be is essentially starting at just the beginning of wherever we're looking at price, right? What we're going to identify whether or not is if as we're pushing up, right, are we respecting previous low points, right, to then drive price up to make a new high? Because basically what happens is we get this push up, drops down, right? What do? This closes above this previous high. So what is this going to be? This is going to be a higher high, or a HH. So this area right here is our higher high. This area below here is our higher what? Low. Okay. So what then do we get here? Higher high. What do we get here? Higher low. Right? Then we get a higher high. And this is where a lot of people will probably get psyched out. Because what people will sit here and do is be like, damn, we closed below this previous higher low. Let me look for shorts on this area. Right? And the reason why that wouldn't be valid, and the reason why it wouldn't be valid, you wouldn't know it was invalid, not because of what happens in here, but because of what happens in here. Okay? So the reason why this would be invalid is because overall, right, from the beginning of our structure. So this is what you have to start to learn to identify. The range that we're playing in. Because there will be a range that we're in. And within that range, there might be bullish structure on the hourly, but on the daily time frame, it might be bearish structure, right? So overall, the structure might be leaning towards the downside. But on the smaller time frames, you might be able to find buy positions, right? Longs. So overall, just immediately looking at just where price is up until this point, right? So even before we actually, push up. So just us coming down to this point. The reason why you have to sit here and this would technically be our new high or low, right? Is because one, we don't close below the bottom of this range. So the structure that we're playing off of, this whole bullish range, we don't actually make a low below that. But then on top of that fact, we actually make a higher high right after. Then what does this become? Higher low, right? Higher high, right? Higher high, lower low, okay? So what ends up happening in here? Well, this is a little bit different. In this case, you could sit here and you could say, all right, well, this closed below the previous higher low. It's absolutely correct, right? Because in this case over here, we get a close below the body of this candle. Okay, so with this close below here, now what we actually do is we break into a bearish counter trend. Okay, so the reason why we can confirm that this is a bearish counter trend is the fact that this high gets this high doesn't get broken. So the fact that we didn't close above this high, now what does that show me that this is? This right here would be our LL, aka our lower low. This would be our LH, or lower high. So you can see that this lower high, the reason why this now is bearish structure versus that bullish structure is because when we close below this previous higher low, right, we also fail to now make a higher high. So the fact that we made a lower low, which is not what we want for bullish structure, and the fact we came up and closed below and made a lower high, that now is our confirmation that price wants to continue towards the downside. Okay? So market structure in a nutshell, right? Like I said, is just being able to identify overall just these bodies and these candle closes and being able to play the overall direction just based off of everything, right? Because for example, let's take a look at gold. So when we sit here and we take a look at everything, okay? So as we are obviously just having price develop over just a course of all of this time, right? Right here looks like a nice little area. So, for example, okay? We overall, just looking at price, right, from this particular area, right, identifying this little range, it's like, okay, just by looking at this low down here, to this high up here, right, we have a big range. So you have to identify your trading range, okay? So within this range, we have a bearish downtrend, and we also have a bullish uptrend. And now you can see we've started to kind of counter trend again. So overall, we've just had a bunch of up and down movement towards just both directions, right? And it's really been volatile. So right here, now, I feel like a lot of the time people sit here and they don't actually understand how to identify a break of structure. Like for example, right? The initial break of structure that occurs in this particular area, in my opinion, would be when we close below this low. And notice how long it actually takes for us to come back and revisit this area with insufficiency before we then actually continue and drive price even lower. So notice how when it comes down to structure, right, we're bearish, 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 right, in terms of making just lower low, lower high, right? This would be our lower low. And then notice, this is kind of what I was describing to you guys, is where you guys kind of get psyched out, right? In terms of this, right, you would see this lower low. You would see this candle close here, and you might be like, oh man, we're now made a higher low. Let me try and buy it. But then what ends up happening? We break down. So you have to really pay attention to whether or not price has actually returned to that last up candle before the down move, right? When we sit here and we look at the candles, and we sit here and we identify where this price came into, right? It came into an area of what? Imbalance. So what is an imbalance, right? Typically, right, what an imbalance is going to look like in terms of the market, that'll be the next thing that we're going to kind of dig into today, right? So an imbalance, typically what you're going to have is, boom. So let's say this is an up candle. Right, we got the wick. Got the wick. So bear with my candles. All right, these are candles. All right, these are candles. All right, so imagine you have down movement, you have candles, right? And notice how we have these wicks, right? So one thing to notice is that this second body doesn't actually have a wick. Okay, we don't have an up wick, we don't have a down wick, but in between this body, right? And then let me do this too. Actually, need one more candle. Mind my candles, okay? This just looks ugly now. I don't know why I tried to do that. But okay, pretend it's a candle, right? This is a candle too, right? I tried to just make the imbalance a little bit easier to identify, right? But basically, within between all of these candles, right, the areas of insufficiency are gonna be where the wicks are not connecting. So we see in this particular case, we're selling, selling, selling. In this case, we sell, but we have the wicks here. So what that wick is doing is offering buys, okay? So when you break down a candle and you dissect it, right, the smaller the time frame you can break it down to, and if there's still an imbalance there, that's how you know that it kind of like is going to be an area that ideally would potentially be a target. Because if we sit here now and go to the chart, okay? Mind my ugly candles. What we're going to sit here and do is pay attention to the 5 minute and just pay attention to insufficiencies that just really got filled over the course of the last couple of days. Okay, so just immediately looking at this. Okay, so like we discussed, we have just being able to identify overall, right, the structure of what's going on in terms of the market. So taking a look at this, obviously we're bearish, bearish, bearish. So what we want to see is just lower lows and lower highs, right? So this would be that lower low or lower high up in here. Right, so we have our lower high, right? Price breaks down, finally gets a lower low here. Notice how as soon as we make a lower low, right? As soon as we close below that previous lower low, right? What do? We come back up. I guarantee you, I'm gonna put a box here. This is either gonna be a mitigation or it's gonna be an imbalance fill. Okay, so this is an imbalance fill. So do you guys see how in between these candles, kind of just like how I was drawing out, right? You guys see how there's just this body right here just selling, and then right after there's a wick right here, there's a wick right here, and then that's it. It kind of drops down. So there's no coincidence why we're coming back and we're filling this area so precisely. So this is truthfully how I'm able to get some of my best entries off of imbalances, because this is kind of like a glitch. Think about it as a glitch in the matrix. So this is a glitch in the matrix, and all we're doing excuse me, is exploiting the glitch, right? So drop a 1 if this makes sense. Like, so far in terms of market structure, have you guys followed with market structure? Drop a 888 if you guys understand the market structure, and drop a yes if you guys are understanding the imbalance so far. Like, does this make sense in terms of just the basic way that I've explained it? Because I'm going to go a little bit more in depth, but is there anybody that just doesn't understand anything or has a question? Okay, perfect. Perfect. Because, like I say, I just try and simplify it. Because everything is really fractal, right? But the thing about imbalances, where from the imbalance do you enter? That's a good question. So for me personally, I like that question a lot, because I feel like a lot of people play the open of the imbalance. So for example, right, if you were to take your fib, right, ignore that, and if you were to fib this imbalance, right, from wick to wick, right, that's ideally how you want to use your fibs, from wick to wick. So if we sit here and we just go from wick to wick, ideally, in retrospect to the imbalance, I'm looking personally for 100% fill. So do you see how here, in terms of our Fibonacci, we actually came past 100%. We actually went past 110%. That is like a perfect fill for me. Like the epitome of a perfect fill, right? And as I talk about mitigation too, right? Mitigation might have to be set for another call because I really want to make sure imbalances is something that you guys understand, right? Because taking a look at this imbalance right here, like I said, the reason why this is an imbalance that's of importance is because of the fact that the 15-minute structure in here broke. So that means this candle here on the 15-minute actually closed below the body of this candle, which was that higher low. So immediately as soon as we make a new lower low, we come back up, make that lower high, but we're filling in insufficiency, right? So if we just look to the right now and we look immediately at what's below us, notice how this wick comes up into here, right? So there's no insufficiency, there's no imbalance. But if we look at this candle, looks a little fishy, right? So if we sit here now and play this imbalance, right? And let's say you take your position like this. Stop loss above that high, right? And just even to like where price, ideally you would want to TP probably at a new lower low. So in terms of a new low, right, you probably want to see that get taken. So this is about a 1 to 10, right? And that's just a little something light, right? So if we were to stay here and look to the right, where do we come to? The 100% of this imbalance, right? We come up and fill this beautifully, right? Which is the same thing to me. I normally like to play the highest point, so it's like I would play that candle normally, but ideally you want to sit here and you want to target the imbalance, but then you want to see if there's a candle or candles that are above on top that you could also use to target for potential entry. Because like I said, if we look here, it's no coincidence why it's so fractal and why it's coming to that point. And notice how the in-between, what do? We consolidate, right? On the 5-minute, what are we doing? We're creating equal lows. What's equal lows for us? Equal lows is liquidity. That's money. That's a target. That's a target that we're looking for in terms of take profit, right? This was our target. Our 1 to 10 was below a retail support where people are buying, okay? Then if we sit here and we really notice again, all right, cool. Where's the next little insufficiency imbalance? Well, right in here. Look at where we come back to again, right? Let's see if we actually came a little bit deeper into here. Yeah, so we did. So notice this. Even though we continued going higher, you have to see how fractal these imbalance fills are, because as soon as we come back to this imbalance fill fully, notice how we fill it 100%, we get a reaction. Like you can almost guarantee a reaction out of an imbalance fill if you're sitting here and you're playing just the right structure, okay? So this is why when I sit here and I say, even yesterday, or yesterday's trade, that's what we were sitting here and this is what we identified. We sat here on the 15-minute time frame, and that's why I told you, I'm like, yo, you could take profit on the buys because realistically on the 15-minute, we filled what we needed to in order to go down, right? We also have an imbalance up here, but this is where a lot of people kind of get stuck. They'll sit here and they'll play the imbalance all the way at the top, but they're not paying attention to just the daily range. They're not identifying certain things like we're not going to take the high of the day more than 1 time or 2 times. So the fact that this was the high of the day, and during the beginning of New York, we made a new low of the day, and right at the beginning here, we like the fact that we failed to break above this was just evidence. Like I said gold probably going to dump, and what did it do? It dumped, right? And it's like we gave you the play on just how to be able to position yourself into terms of catching that potential fill, right? But then really when we sit here and we look at something like US 30, right? US 30 is something that, you know, we sat here and we took a position off the 5-minute, right? So we sat here and we took a trade right here, risking literally 21 points, right? And the TP was literally, this was literally our TP. Our TP was like a 15 or 30-minute imbalance down here, right? It was this little imbalance down here in the cut. This was literally our target. If you go watch today morning's call, you're gonna see that I called out a 1 to 12 literally, and it hit in 5 minutes, right? 10 minutes, 15 minutes, okay? And then it literally came back and gave you another chance to re-enter. So this is what I tell you, right? It's all about knowing when to take profit. The reason why the market reacted out of this area is because it was an imbalance. There was an insufficiency, right? You see how there's a little gap in between here? There's no wicks that go in between here, right? Yeah, there's wicks on the other side, but that doesn't matter, right? Because that's not relative to this price action, right? Yeah, this price action is filled to the left, but to the right, right? Just like how there was an imbalance in here, right? Just like how there was an imbalance in here. So the thing about imbalances is there's going to be imbalances everywhere, right? There's an imbalance here. Like I said, there's an imbalance lower. But what you want to do is align your imbalances with structure, with the institutional area, with just the overall concepts that we learn when it comes down to wick off, when it comes down to just even these smart money concepts. Because there's so many different things. Like I said, it's like we kind of touched on imbalance, or we did touch on imbalance, and we touched on market structure. But I'm going to go through mitigation on a call in itself, because that's probably one of the hardest parts to kind of identify which candles to play. And I'm going to teach you how I kind of select which areas, which candles. But for the most part, like, is everything I'm saying making sense to you in the imbalance? Like, did anybody, like, is anything, like, did anybody just kind of, like, oh, shit, like, damn, like, I get it now? Like, do you guys kind of, like, understand it a little bit more to the point where it's, like, if you were to go sit back and back test now, and if I were to give you guys homework in the boot camp to drop where you think imbalances are, like, valid imbalances are that you could potentially take an entry off of, right? That's what I want the homework to be for today. I want you guys to mark up at least 3 charts, 3 different imbalances, and drop in the bootcamp chat, right? Because I know a lot of people haven't been keeping up with the homework, right? And yesterday even I wasn't able to clear the chat, so I'm going to clear it today because I know a lot of people are lazy, and that's cool. Like I said, if you get kicked out of the bootcamp, don't feel the type of way, right? I told you to message me. I told you to just how not to get kicked out, so you can't get upset at anyone other than yourself for obviously that happening. But what I genuinely want to see for tomorrow, right, when we hop back on, is just I want to see you guys being able to start applying some of these concepts. Like I said, go and back test the market structure. Go, like, the whole point of the bootcamp is to get feedback, right? Drop in the bootcamp what you guys think that you guys are going to be able to just make, right? I really want you guys to sit here and just really take advantage of everything. But in terms of that, family, I'm going to go ahead and wrap up today for part 1 of Smart Money Concepts. Like I said, this is something that is genuinely just, like I said, it's going to be a lot in terms of just really sitting here and trying to simplify it, but it's only going to be a lot because it's something that's new, so you just need repetition. It's really easy. It's easy. It's just it takes reps for you to just be able to see it as easy as I see it, right? Because sometimes you might have a bias and it's shit. Like for me, for example, it's like if I sat there and just stayed attached to a gold buy bias, we would have got clapped today. If I sat here and I was attached to a long indice bias, like, we would have got clapped. So this is why we sat here and we just were able to switch biases just based off of what the market was giving us. Obviously 30 we were bearish the whole time, right? The other ones we were a little bit more bullish, obviously for reasoning. We have our reasons, but at the same time, like I said, family, this is something that I really want you guys to continue to tap in. Like, for us to only be getting like 10-15 people, like I said, that's going to change by the next, like, literally, like, I guarantee you within the next week or so, you guys are just going to watch the difference in terms of the number of people on the call, but also the number of people that are winning, right? Because it's just so crucial to be able to lock in with people that are constantly willing to work, but not only work, but they're just willing to connect and also help the people in their circle. So in terms of that, family, I love and I appreciate you guys for tapping in, and I hope that you guys are going to be able to tap in tomorrow, right? And like I said, we're going to be live again tomorrow, 9 a.m. for New York session. So make sure you guys, or 10 a.m., right? Make sure you guys are live with us tomorrow.